Alibaba's $10 billion share sale to fund AI has cut its stock price, showing how heavy tech spending now shapes investor returns across Asia. This is Omni View, episode 153. Alibaba announced a new share placement of about $10 billion to support its AI spending plans. The company's shares dropped after the announcement. The move comes as major technology firms increase investment in artificial intelligence infrastructure and models. The placement adds to the number of shares available while directing proceeds toward computing capacity and model development, rather than immediate operations. Market reaction reflected concern over dilution at a time when interest rates and energy costs remain elevated in several regions. Nikkei Asia framed the placement as a direct response to the need for larger AI budgets at Chinese technology companies, noting that the funds target long-term infrastructure rather than short-term revenue. The Economic Times noted that markets are watching how such capital raises affect valuations when energy costs and interest rates remain uncertain, with bond yields already moving higher in response to supply concerns. Both outlets observe that the funds target long-term computing capacity rather than immediate revenue, yet they differ on whether the dilution signals competitive strength or simply higher costs of waiting for returns. Nikkei Asia emphasizes supply chain and technology positioning, while the Economic Times highlights broader investor caution tied to inflation data across member states. Even supporters of the placement acknowledge that returns on the new computing capacity will take years to appear. What happens next? The first compliance and spending updates from Alibaba will show whether the capital begins to translate into higher operating margins. Shifting now to diplomatic efforts in East Asia. A group of Japanese lawmakers traveled to Beijing following remarks by a Japanese politician on Taiwan that had strained relations. The visit aims to address economic fallout from the diplomatic friction. Officials on both sides described the talks as an effort to stabilize ties. The meetings occur against a backdrop of ongoing commercial projects that link Japanese logistics firms with Taiwanese chip manufacturers operating in southern Japan. Both governments have signaled interest in limiting further damage to trade and investment flows. The Hindu International reported that economic cooperation has suffered since the remarks, and that both governments seek to limit further damage, pointing to disrupted supply chains and reduced business confidence. Nikkei Asia noted that supply chain projects involving Japanese and Taiwanese firms continue despite the political strain, with construction and equipment installation already underway at new sites. The two outlets differ on whether political gestures or commercial links will set the pace of any recovery, with the Hindu International stressing diplomatic repair and Nikkei Asia highlighting resilient private sector activity that may outlast the current friction. Both sides concede that further incidents could quickly reverse any gains from the current visit. Next, a look at infrastructure development in South Asia. India continues to expand hydropower capacity in the Kashmir region. Local residents and some officials have raised worries that new dams could increase flood and landslide risks during heavy rains. Project developers maintain that modern designs include safety measures. The push forms part of wider renewable energy targets that seek to add generation capacity outside existing river basins. Environmental assessments were completed before approvals, according to government statements. Nikkei Asia described the push as part of India's broader renewable energy targets, while recording community statements about past flood damage and the need for stronger safeguards in the valley. The Hindu International has noted government statements that environmental assessments were completed before approvals, framing the projects as necessary for meeting national power demand. The shared factual ground is that construction is moving forward. The difference lies in how each source weighs economic benefits against documented disaster history in the valley, with Nikkei Asia giving more space to resident concerns and the Hindu International emphasizing completed regulatory steps. Developers say the next rainy season will test whether the new safety features perform as designed. Meanwhile, emergency cooperation is underway in the Balkans. Crews from the European Union and a Russian aircraft joined Serbian firefighters to contain large wildfires. Extreme heat has increased fire activity across the Balkans. The joint effort focuses on protecting populated areas and forested land. Previous seasons have seen similar cross-border assistance when national resources proved insufficient. The current deployment combines EU ground teams with aerial support from Russia to reach remote fire zones more quickly. Al Jazeera reported the deployment of both EU and Russian resources as a practical response to the current heatwave, stressing the immediate operational needs created by rising temperatures. Mirko Press noted that cross-border assistance has occurred in previous Balkan fire seasons when national capacity was stretched, placing the event in a pattern of regional emergency cooperation. The outlets agree on the scale of the fires. They differ on whether such cooperation signals any broader diplomatic pattern, with Al Jazeera focusing on the heat-driven urgency and Mirko Press on the recurring nature of the assistance. Fire officials say the combined teams will remain in place until the current heat wave passes. Now, some progress worth knowing about. Itochu and a Taiwanese technology firm have begun supporting new semiconductor facilities in southern Japan. The project adds manufacturing capacity outside existing clusters. Construction and equipment installation are underway. The partnership combines Japanese logistics expertise with Taiwanese process technology to shorten supply lines. The sites are intended to serve both domestic and export demand. Nikkei Asia reported that the partnership combines Japanese logistics expertise with Taiwanese process technology to shorten supply lines, with the new facilities designed to reduce reliance on distant production hubs. The outlet noted that the sites are intended to serve both domestic and export demand, positioning the project as a step toward more resilient regional semiconductor capacity. The first production runs are scheduled once equipment installation finishes later this year. Stock exchanges in Thailand and Singapore are adjusting rules and incentives to attract technology companies, especially those focused on artificial intelligence. The moves follow a rise in AI-related investment across the region. Both markets aim to capture a larger share of new listings. Companies are evaluating faster approval processes and lower fees when choosing between the two venues. Regulatory stability and valuation multiples remain key factors in final decisions. Nikkei Asia reported that the two exchanges are highlighting faster approval processes and lower fees for tech firms, with both markets positioning themselves to benefit from the current wave of AI funding. The same outlet noted that companies are weighing regulatory stability against valuation multiples when choosing a listing venue, as firms seek the combination that best supports long-term growth projections. Listings decisions expected in the coming quarter will show which venue gains the larger share of new AI-related companies. Investors are positioning for the European Central Bank to maintain or increase interest rates because of persistent energy cost pressures. Recent data show inflation risks remain above the bank's target in several member states. Bond yields have moved higher in response. An ECB policymaker stated that current inflation readings sit below the bank's more severe modeled scenarios. Market participants continue to monitor supply concerns that could keep prices elevated. The Economic Times described the shift as driven by supply concerns in global energy markets, with bond market pressure already visible in higher yields. Investing Live quoted an ECB policymaker stating that current inflation readings sit below the bank's more severe modeled scenarios, suggesting room before the most adverse outcomes materialize. The two sources agree on the direction of market pricing. They differ on how quickly energy prices could ease, with the Economic Times stressing ongoing risks and Investing Live noting the gap between actual figures and worst-case models. The next ECB policy meeting will indicate whether rates stay on hold or move higher. Now, to really understand this story, there is something most coverage leaves out. Most coverage of large technology financings treats a share placement as simple dilution, yet the mechanism is more specific. When a company such as Alibaba issues new shares, the number of outstanding shares rises immediately, while the cash raised is earmarked for capital projects whose returns appear only over several years. This timing gap means short-term earnings per share fall, even if the long-term growth case remains intact. Historical cases in the semiconductor and internet sectors show that markets price these placements more harshly when interest rates are elevated, because the cost of waiting for returns increases. Knowing this, readers can separate the mechanical effect of dilution from any signal about the company's competitive position. One concrete check is to compare the size of the placement to the company's existing cash flow from operations, rather than to headline market value alone. Another is to examine the stated use of proceeds in regulatory filings to see whether the funds target capacity that directly supports revenue growth within a defined timeframe. Investors can also track subsequent quarterly reports for evidence that the new capital has begun to translate into higher operating margins. If you want to go deeper on Alibaba's capital raise, compare how Nikkei Asia and the Economic Times are covering it. Tomorrow, watch for updates on whether the European Central Bank signals any change in its inflation outlook. That's Omni view. The news can feel heavy, but understanding what's actually happening and what's being done about it beats doom scrolling every time. Stay curious. Pick one story from today and read it from a second outlet you don't usually open. If balanced perspectives are valuable to you, share this with a friend and subscribe wherever you listen. See you tomorrow. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. One more thing. If you liked today's episode, our sister show Models and Agents for Beginners is worth a spot in your feed. Artificial intelligence explained simply for beginners and curious teens. It's one of the Nara Network's daily briefings, all free at naranetwork.com. Live dashboards, TSLA, SpaceX launches, the investing scoreboard are all at naranetwork.com data. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.